From the library of the New York Stock Exchange at the corner of Wall and Broad Streets in New York City, you're inside the Ice House, our podcast from Intercontinental Exchange on markets, leadership, and vision in global business. The dream drivers that have made the NYSE an indispensable institution of global growth for over 225 years. Each week, we feature stories of those who hatch plans, create jobs, and harness the engine of capitalism. Right here, right now at the NYSE and at ICE's exchanges and clearinghouses around the world. And now welcome inside the Ice House. Here's your host, Josh King of Intercontinental Exchange.
Any listener to this podcast knows that the long journey to becoming a public company really begins years before an IPO, a SPAC combination, or direct listing. It used to be easier to identify the companies looking to become the next Twitter or Snap because entrepreneurs had Sand Hill Road permanently etched on their wayfinding devices, really a divining rod for where funding and startup expertise could be found. Historically, options were limited to the environs around, say, Silicon Valley, but today there are dozens of tech hubs flourishing in all corners of the planet with fertile resources to be found in Southeast Asia, the Middle East, Latin America, and elsewhere. The international story of the market is not new, and as the largest exchange in the world, the name of the New York Stock Exchange belies its particular geographic footprint in Lower Manhattan. In fact, this year marks the 150th anniversary of the first international listing on the exchange. As part of the more aptly named Intercontinental Exchange, the NYSE operates offices in a number of countries to serve the nearly 500 non-U.S. companies listed on the exchange today. We also partner with dozens of organizations that are working to nurture local innovation, both domestically, such as our recent IPO boot camp focused on Detroit, and internationally, like our support of the Latin Tech Forum. Our guests today, Insider CEO Hande Cilingir and Riverwood Capital co-founder Francisco Alvarez-Demalde, both have spent their careers crisscrossing the globe with companies looking to disrupt the status quo and scale from a simple idea to an industry leader. They join our show today to talk about how looking through a wide lens reveals that entrepreneurship really is universal, and the opportunities for technology, artificial intelligence, and investment growth are, frankly, everywhere. Our conversation with Francisco Alvarez-Demalde and Hande Cilingir on their careers, the global footprint of technology, and, like Indiana Jones, the never-ending search for the great next unicorn, wherever it may be found. That's coming up right after this.
Whether it's markets, exchanges, or networks, connection makes everything possible. The connection between data and technology, innovation and expertise, and most of all, between people and opportunity. For over 20 years, ICE has transformed markets, products, and processes to make things work better, faster, smarter. From modernizing energy and commodity trading to revolutionizing the bond markets. Whether it's the world's largest stock exchange or the dream of home ownership, we do more than see the big picture. We create it. You may not know our name, but we bet you know our network. ICE. Make the connection.
One of our guests today, Hande Cilingir, is the co-founder and CEO of Insider, a provider of multi-channel growth marketing platforms that leverages real-time predictive segmentation powered by artificial intelligence and machine learning. She founded Insider with 5 fellow co-founders following her exit from a language school that she sold to International Mediterranean Academy. Hande is widely recognized for her global tech leadership, including being ranked by Crunchbase as one of the top 3 female CEOs of a non-US company. She's joined by Francisco Alvarez-Demalde, the co-founder and co-managing partner of Riverwood Capital. Prior to establishing Riverwood, Francisco was an investment executive at Kohlberg Kravis Roberts and Company, that's NYSE KKR, where he focused on leveraged buyouts in the technology industry and other sectors and was also with Eaton Park Capital Management and Goldman Sachs. Francisco, Hande, welcome inside the Ice House, and thanks for joining us.
Thank you very much, Josh, for the intros.
Let's start with Francisco. Today, Francisco, Riverwood Capital manages a global footprint of investments totaling around $3.5 billion. Take us back to the start, 2008. How did Riverwood Capital founders come together, and what was the initial plan?
Hi, Josh. Great to be here, and I love being with the New York Stock Exchange again. You've been great partners to some of our companies over the years, so thank you for doing this and also for highlighting all the amazing things that are happening global in technology, in particular in emerging markets. In terms of our experience, look, we started the business back in 2008, and at that time, the whole reason why we wanted to build a new firm was we thought that different technology trends were going to have a very significant impact in the economy, from the internet to connectivity to then smartphones and then all the other trends that we all know, such as cloud and artificial intelligence. Our view was all this is going to have such a impact on almost all the sectors in the economy, and that's going to create a lot of new companies that, after proving a business, after finding a product market fit, after getting a good base of customers, maybe having a good position in one country, then they were going to need at some point that help of what we call scalability. How do you get from the 20 million in revenue, 30 million to 100 to 200 million? And we thought there's going to be a lot of new companies needing that type of expertise. So why don't we create a new firm to become that growth partner and scalability partner to those type of businesses? And usually that includes growing the go-to-market, expanding geographically, expanding the product, and a lot of things that we call internally the toolkit for scalability. And that's how we came together. 10 years later, here we are, having supported almost 60 companies globally. And, those companies have grown 40% its revenue per year during those 10 years on a weighted average basis. So it's been an incredible ride. And the first thing I could say, Josh, is, one thing that is pretty incredible today is the market opportunity, the impact that different technology trends are having in our economies, in our countries, is much bigger than what we all thought back in 2008. Things are just happening bigger and faster than what we all thought back then.
Hande, how has the inflow of capital combined with regional emerging markets that feature a growing middle class really helped transform places like Turkey and Singapore into tech hubs that can compete globally? You're speaking to us today from Istanbul.
I would say that digital transformation, it has been accelerated all around the world, and the situation is same in Middle East or in Asia, and also in the recent markets that we have expanded, like Brazil or Australia. And of course, the capital inflow to those countries has helped to accelerate this digital transformation. But I think in many ways in those markets, I would say that those are some technologies or the companies like us, I believe, leading leaders of the, or let's say builders in the market. And in some categories or for some products or for some technologies, we are the category makers. And when we look at the intention, or let's say the reason that we started Inside in the first place, I would say that one of the most important and strongest reasons was showing the whole world that breakthrough product companies can be also created outside of Silicon Valley. And I believe all of this capital inflow and all of this emerging markets interest of the venture capitalists or private equity companies is helping the companies from east part of the world to become like tech stars all around the world.
Yeah, indeed. I mean, Francisco, you serve on a number of boards of companies that Riverwood has invested in, including Globant, which is NYSE ticker symbol GLOB, whose founder, Martin Magoya, was our guest way back on episode 59. Martin talked about the arbitrage of operating a global tech company in an emerging market compared to Silicon Valley, maybe, less expensive to find engineers, real estate, et cetera. Is the gap between the emerging and mature markets growing, or is it narrowing?
Yeah, look, it's fascinating what's happening. And I would say that first, the geographic barriers are really coming down in technology over the years. And that's driven by not only globalization, but also access to knowledge. So if you go back 20 years ago, when I was first getting into the, let's call it Silicon Valley type, meetings and understanding of what Silicon Valley represented back then, there was a little bit of a, monopoly of information. You were there, you connected with people, but then over the years today, mainly driven by the digitalization of our lives, we all have access to information no matter where we are. And this combination of globalization as well as digitalization, it's really lowering barriers and access to knowledge and to talent. And the talent is really becoming, those centers of talent are becoming so global that it's pretty incredible to see. So the consequence of that is you're starting to see amazing companies like Insider, for example, that Hyundai leads, where you have teams of incredible talent in Turkey or in Singapore or in multiple geographies. And those teams are actually innovating. They're probably showing and having the quality that is probably even the same or better than engineers in Silicon Valley. And that's happening all over the world. So it's really fascinating to see how talent is coming from everywhere. And that is having an incredible impact in how companies are built. Companies are built now with a more global approach, almost thinking more about a network than like countries. And all that is having an incredible impact in how both us as investors are thinking about the opportunities, but most importantly, in how companies are being run and how talent has access to opportunity from different places. Globant
and Insider were some of the companies that you wrote about in a recent Medium article on the software revolution. How has the software revolution really shaped the past decade and really shrunk the globe, as you say?
Yeah, look, I mean, I wrote that piece, not that I was so innovative about it, because I think a lot of people have been talking about this, but I just share some of our own experience, which is incredible, where, again, going back to my earlier point, if you look at, I think the examples I shared in that note were about Insider, Globant, and Vitex. And the three companies have been built outside of Silicon Valley, started in Brazil, in Argentina, in Turkey, and the three of them are actually leading their own respective sectors on a global basis, competing with any of the companies you can imagine that probably started in Silicon Valley and today are, global champions in technology. One point that I would add, which wasn't in an article, but that we also see, is that, at the end, when you think about scaling a company, when you think about building a long-term businesses like special companies like Insider, for example, it's not just about, having the capital. It's not just about, hiring the right people, but a lot of it is about having a purpose, having a vision, and then having a team that is really committed, that feels that they can change what they are doing, that their job is much more than a job. It's like, it's almost like a mission to try to achieve certain objectives. And a lot of times, what's fascinating about these groups and what's fascinating sometimes about talent in emerging markets is that you see a lot of passion, and passion is a very important tool.
So what do you look for in an entrepreneur or a founder when you're considering a potential investment? Is it a decision solely based on your assessment of the enterprise's business model and growth potential, or are there other intangibles?
Yeah, at the stage in which we invest, which is already in proven companies, that are in this growth stage, we're less about, finding the new innovation or the new disruption, and we're more about finding, of course, an incredible market opportunity, finding companies that are attacking that opportunity, that problem, solving that problem with unique, strong, real technology that can solve the problem and can also scale over time. And then also finding that team, that culture that can really execute on that vision and that market opportunity. So I think we look at all those components and we try to make our best assessment, and then after investing, try to support the journey of those companies.
One of the investments Riverwood Capital has made was, as we know, Hande's company Insider, where you led its $32 million Series C round. Do you remember when you first heard of the company, and how did you become interested in becoming an investor and participating in the round like you did?
Yeah, we met Hyundai, an insider, via some introduction. And then as soon as we met the team, we were impressed because we thought that they were solving a very important problem. When you think about big brands, retailers, and other companies that are engaging with hundreds of thousands of millions of consumers, a big issue that you have is how do you try to serve those consumers with a customized digital experience? You want to be meaningful to those customers. You want to try to provide the best service you can, and you need the type of software and platform that Insider serves or offers. And so the market opportunity was there, and it's increasing market opportunity. And then second, we found what I said earlier. We find an incredible team with a great product. We did a pretty deep product diligence to understand the feature comparison, the quality of the product. And then most importantly, after all that, then we found a team that was very committed, incredible leadership in Hyundai, Serhat, and the founders of the company. But then broader than that, like a purpose, an incredible culture of intensity, of execution, of trying to do something bigger than each individual person. And that combination was extremely attractive to us. The company was also in a moment of expansion in terms of geography, which is also something that we really like. It's something that we feel we can help on that journey. So the combination of all these factors made us extremely excited, and we are very grateful that Hande and her team were open to accepting us into the family.
Hande, Insider came after your first company was acquired by International Mediterranean Academy, but the idea was spawned really as you were trying to convert website visitors to enroll in your immersive in-person language course. What was the origin story for Insider, and how did the founders come together?
Great question, because the origins of the story means a lot for the roots of an organization and also for the purpose of the people joining to this organization. For us, the main reason we decided to establish Insider, or the origins of the story, is all about actually realizing that all the world is going digital. After the language school and we sold our first venture, we decided to do something in digital. So that was the first reason we decided to establish Insider. The second reason was, yes, e-commerce is growing sharply in the world or all around the world, but we already observe a lot of e-commerce companies or already a huge competition in different countries. So that's why instead of starting an e-commerce company or online business, we decided to be a painkiller to the pains of e-commerce companies, which is mostly about the conversion rates. So they actually try to bring users to their website by paying millions, but the biggest challenge is about conversion optimization. They cannot convert those users into the buyers, or they cannot convert these users to retained users. So that's why we have decided to be the painkiller for their biggest pains and establish Insider. Insider is actually a growth management platform, all-in-one platform for the enterprise marketing teams for the online businesses. And what we are doing is we unlock growth funnel across different touch points, from acquisition, activation, retention, and revenue. And of course, we do it by delivering personalized experiences. It's backed by AI and machine learning and predictive engine at its heart. So that's the story of Insider. That's the, let's say, why we have started in the very first place. And I can say it's about the origins of the story. If you come to the romantic reason that we established Insider, because entrepreneurs are romantic people, we have some facts, but at the same time, we have our very romantic reasons to start a company. And the romantic reason, as I mentioned in my introduction, we just wanted to show whole world that the breakthrough product companies, digital companies, leading ones around the world, can be also established outside of Silicon Valley. And that was a romantic reason actually we started Insider. And as co-founders, I think we are lucky because we are 6 co-founders. Time to time, it sounds a little bit scary, I know, because it's like a marriage and you feel like you are getting married with 6 people. It's tough. It's really tough to manage. But I believe that if you are sharing the same values in life, and if you have only conflict about, ideas, rather than money conflict, power conflict, ego conflict, then it works. And it really works well. And as 6 co-founders, we are lucky to find each other. But at the same time, we are lucky because in the language school, I was partnered with one of our existing co-founders and Insider. So we are doing business together for the last 10 years or 11 or even maybe 12 years. And the other co-founder, who is our currently partner success team, Mehet, is our friend from London School of Economics from university. And our CTO is again a childhood friend who used to work in Oracle for a very long time, knows the pain of the big marketing clouds well and very closely. And this is why 4 of the co-founders knows each other from the past. The rest 2 joined the team later. And I would say 3 of them are from technical backgrounds and 3 of them are from business backgrounds. And this is how we started Insider. I hope it was an answer to your question.
Yes, it certainly does. Before we go to the break, Francisco, Insider was recognized by the Gartner Magic Quadrant for multi-channel marketing hubs in 2020. And it was recently announced that Alibaba-owned Lazada chose Insider to be its global marketing partner. From an investor perspective, what do you take away as the growth potential for the company?
Yeah, look, it's tough to be objective because we're big believers in Insider and the entire team. But the way I would describe it is it's happening. I think it's happening in terms of companies like Insider, and there's other special companies like Insider in emerging markets. Sometimes you not only need the product, the go-to-market, the team, the culture, but you also need validation. You need the word to really see that you can compete. And I think all this recognition it's very well deserved. And I think that recognition is actually going to help even add that incremental validation. So the company will be able, in our opinion, to continue growing globally, to be very successful across all the different geographies it's expanding. So I think literally the sky is the limit for Insider, and we're very, very excited.
Very excited indeed. We're going to take a quick break. And after the break, the co-founder and CEO of Insider, Hande Cilingir, and the co-founder and co-managing partner of Riverwood Capital, Francisco Alvarez-Demalde, and I are going to discuss how entrepreneurship and diverse talent have both gone global. That's coming up right after this.
Navigating dynamic markets requires a relentless pursuit of knowledge. Now, join market experts to learn with ICE Education Live. Attend live video training with practical lessons across global asset classes. On-demand modules provide base knowledge. Participants can then attend live training sessions, including group review and tests for certification. We also tailor training for your needs and in-house projects. ICE Education Live courses. Continue your education today.
Welcome back. Before the break, the co-founder and CEO of Insider, Hande Cilingir, and the co-founder and co-managing partner of Riverwood Capital, Francisco Alvarez-Demalde, and I were discussing how their respective careers progressed, all leading up to the investment in Insider by Riverwood Capital. So just to reset the conversation, Insider began operating in markets where your offerings were the first of its kind to be available. But today, you compete with well-known technology giants across dozens of countries. Who are you competing against, and how do you differentiate yourself from competitors in terms of both technology and the offering?
So marketing software sector is pretty much a crowded one. I can see, or we can observe, many different competitors. And in the market, we observe 2 types of different competitors. One type is big marketing clouds, and the other one is point solutions. So I would say Insider is in between. I think we are one of the new generation marketing clouds, where we are trying to overcome the difficulties of the big marketing clouds because they are, old technologies, they are costly, they are clunky. First time to value is pretty much long, and the integration is taking like ages. So many online businesses would like to utilize the tools that they are using in a relatively shorter time, and they would like to see the first value because e-commerce is a multi-metric game, and time really matters. So that's why long integration processes or long operation processes is pretty much difficult for e-commerce companies to utilize. So that's why big marketing clouds has their disadvantages in terms of integration, operation, and being quite costly vendors. Point solutions can answer the needs of the clients or needs of e-commerce companies in some significant areas, which is not very helpful because once you integrate Insider, you don't have to integrate any other solution. And sometimes it's like a mess to get integrated with many different solutions. If you are going to need a one solution with an email product, one solution for a recommendation engine, one solution for personalization, one another vendor for another function, so it might create a mess. So point solutions can't be a one-stop platform. So I think Insider is filling this huge gap in the sector. It's easy to operate and easy to integrate too. And that's why in the current RFPs that we entered with the other big vendors or other marketing software tools or marketing clouds, we can see that in the POCs, Insider managed to show the ROI to their clients in a much more stronger, in a shorter time. And that's why digital marketers, they would like to use tools like us that which can meet with their own needs in a easy and less time-consuming way. I think that's our biggest differentiation.
Coming out of the COVID-19 pandemic, have you started to explore the lessons of how the globe reacted to the past year and its permanent impact on a company like Insider, either on how you're going to run your company or how the needs of the clients may have changed?
Let me look at the effects of the COVID-19 in two different ways. First is about the effect on the e-commerce companies or online businesses, and let's say the second is about vendors like us. So e-commerce companies and online businesses has suffered from the decreasing sales in the first months of COVID-19. This is what we observe from the companies we work together. And today we are working with 900 enterprise clients from 25 different countries. And some of those companies are Fortune 500 companies. Some of them are regional brands. Some of them are world's well-known global brands. And we had a chance to observe many different regions, many different verticals with many different user behaviors as a reaction to the COVID-19. So in the first months, I can say that in most of the verticals, including online retailers, or including travel sector and including, for example, automotive companies, the sales or the interactions has decreased sharply. But after the first, let's say, 3 or 6 months of the COVID, those postponed purchases has started to increase the purchases, or let's say increase the sales for those companies, especially in online retailer, especially in for the electronics companies, electronics online businesses. But there are some certain verticals like travel, like of course accommodation, where we can't observe that the numbers are now back to the normal. Unfortunately, those verticals have been affected permanently. But there are some verticals like food businesses or online retailers. Now we can observe that the numbers are in the way that it should have been. Maybe it's more than expected because of the huge and rapid increase under the COVID-19. So that's the situation about our clients, or about, I think, all online businesses. If you ask me the possible effects or the existing effects on the vendors like us, of course, it affected our business in a positive way, because while the whole digital transformation has been accelerated all around the world, the usage of the tools like us has been also accelerated, because people would like to be more observant about their conversion rates, about their spendings after especially these budget deficits or budget restrictions. So the tools like us has started to become much more important for the online businesses. So we have seen a pretty much positive effect on us.
Francisco, studies have shown that the company profits and share performance are around 50% higher when women are represented at the top. This suggests that investing in a female-founded businesses like Hyundai's are not just about equality, but good investing. Does this factor into your investment decision metrics that you make?
Yeah, look, it's pretty clear to all of us that diverse teams and companies that embrace diversity are driving and can do a better job than companies that do not see it that way. And I think that's, of course, part of how we try to assess the companies in which we invest and how we support them.
Are there other areas that the market is ignoring by narrowly defining where tech breakthroughs traditionally come from? I mean, you're living proof of the opportunity that comes when you look beyond Silicon Valley.
Yeah, I think at the end, the market is a broad concept. So, the market always gets to the opportunity somehow. So clearly there was a catch up to do in technology investing outside of Silicon Valley, but that catch up is happening. I mean, that gap is closing. I think more and more investment firms are becoming more global. They are understanding that the opportunities out there, that, there might be a team that you don't know about in an area very far away from Sand Hill Road that is probably doing something better than the team is doing it, close to your place. And I see that gap really closing. I'm very optimistic about just when I see the quality of teams outside the US. I'm very optimistic with the international opportunity for technology. Of course, in addition to China, which is, another whole chapter.
Thinking globally, Hande, we recently had Mark Hawkins on the podcast who talked about Salesforce, which is NYSE ticker symbol CRM, their 1+1+1 policy that Insider also ascribes to. We're recording this podcast in April, a month that includes celebrations both of Earth Day and also financial literacy. Why did you embrace 1+1+1, and how is Insider fulfilling those commitments?
It can be applied to anything, right? Because it's all about the mentality of, donating something or making time for the people around you. Because we believe that the creating impact is not only about the business itself. It's also about creating an impact for the people around you. It can be about your family. It can be about your friends, or it can be creating impact for your country. So we believe that. Is a company which started its business from the emerging markets, we are responsible to make something for the people or the countries that we exist and the societies. So that's why we have decided to create a model where we would like to, dedicate 1% of the company's revenue and 1% of the insiders people time and 1% of the company's profit to the students who would like to teach, who would like to learn coding. Because, especially east part of the world, even including Europe, needs to raise a lot of tech companies, because tech companies has the greatest impact on the economies for the emerging markets. That's why teaching code or teaching coding to the students in high school is going to have a huge contribution on that, because those students are going to become maybe engineers, and engineers are going to start their own tech companies, and those tech companies are going to create a huge impact for those countries' economies. So that's like a chain. This is why we have started this program, 1+1+1. And we have started in 3 countries, started with Indonesia, Turkey, and then continued with Singapore. Now we have this program in 9 or even 10 different countries, and it really works well. So far, we have taught coding to more than 7,000 high school students.
Amazing. I mean, Francisco, a couple days ago, the Brazilian cloud technology provider Mandic, which Riverwood Capital was a main investor in, was acquired by Clarinet. What does the deal say about Brazil's cloud potential and the other investments that you have in the space?
Yeah, look, Brazil and Latin America is in a very interesting place in terms of the excitement for technology. So in the last 2 years, we have seen a significant increase in activity, in interest, not only by the investment community, but also by a lot of different technology companies that are really being able to grow their businesses in the region in a way that was probably unthinkable 10 years ago. So even when you look at large tech companies such as Uber or Netflix, they are very important, and Facebook, they are very important businesses in Latin America. And that you can also see that opportunity having an impact in a lot of different startups and mid-sized companies in technology in the region that are, just doing really well. Just growing, creating a lot of new jobs and opportunity, and then being, very interesting targets for maybe global companies that really want to also have an opportunity in Latin America. So in the case of Mandic, the partner that acquired the company was Clarinet, which is a European company with the interest of really growing in Brazil. We also recently announced the sale of RD Station, which is another great software company in Brazil, to TOTUS, which is a publicly listed company in Brazil. So what's happening really in Latin America is you are seeing this combination of a lot of fundraising and new capital to establish companies that are continuing to grow. We are seeing an increasing interest from global strategic companies that want to have Latin America in their revenue, in their platform. And then you're also seeing some local Brazilian companies or even mergers between players within Brazil that really want to get bigger, want to get a scale. So the whole market is firing on all cylinders, despite, of course, the tough times that the region is experiencing due to COVID. So it's pretty interesting to see. By the way, side note, Insider is also doing really well in Latin America, expanding, being a great leader in the region, and bringing this next generation marketing technology platform into Latin America, which, as Hande was saying, as all these companies are getting more and more users, selling more online, they need a next generation platform like Insider for them to be able to do their marketing.
Insider making its way really around the world. One last question for both of you before we wrap up. Hande, you've had one exit in your career before Insider. Do you see yourself as a serial entrepreneur or a longer-term founder this time around?
Great question. It's the first time that I received that question. Well, it's not about, I think, being a serial entrepreneur or being a, lifelong founder, let's say. I think it's all about where you feel like your story has came to the end that you have dreamed for yourself and for the people around you. So until this point, I cannot decide whether I'm going to be a serial entrepreneur, I'm going to start the next story, or I'm going to be a, long-term, let's say, founder with an insider. And if you ask me, okay, what are you looking for? What do you aim to at Insider? I think it should be important and big success story, which is going to show again the world that a company from each part of the world can also be one of the or maybe the top vendor in marketing software. And once we reach this target, once we prove that we can also do it from this part of the world, well, once we are going to inspire many other youngsters to start their own business from that part of the world, then I think we are going to meet our purpose. And I can think about maybe doing something else. But until that point, I can't decide on this. So by the way, we already enjoy from the journey itself a lot. I believe that it's not something that I should try to decide now. We will see after doing everything for Insider and after putting 100% of our effort on that, the time will show the answer of your question.
And I'll put a similar question to you, Francisco. Does Riverwood have a systematic exit strategy for its investments, or is every investment like Insider treated differently? And has the rise of SPACs altered any of your plans?
Yeah, well, thanks. I mean, I think there's two very different questions there. One is, look, on us, we don't really have a defined exit strategy the moment we invest. Really, our driver for an investment is, as I mentioned earlier, we're trying to partner with companies that feel can create a very interesting opportunity for us and for our investors, but also companies in which we want to be part of, where the journey is the journey of growth, of a scale, of trying to really solve the problem, and that's the main driver on how we invest. And then we're not really thinking about, when we make the investment, okay, this is how we're going to exit our investment. We feel that if we invest in good companies that can be can have a positive impact all across and can create long-lasting businesses, we're going to have several options then to at some point monetize our investment, either in one transaction and over time, or sometimes is via an IPO, which then gives you a lot of flexibility on that front. So that's kind of your first question. The second, about the SPACs. Yeah, look, the SPACs are impacting the entire market. It became like almost like having a watch in the investment circles. But I think that, look, it's having an impact. It's a reflection of the interest from the public markets into technology, into high growth, into companies that maybe can become public, into participating in those opportunities earlier or at the right time when, trying to accelerate that process to go public. And I think as everything that happens I shouldn't say everything, most things that happen in markets and in kind of financially driven decisions, it goes in waves. I think that, at the end of the day, it's just a framework for a company to be public. And I think some companies can be great public companies, can be a great story for the markets, can be great for investors. Some other companies, maybe they're probably not so suited to be good public companies. And maybe some of them that went through a SPAC would probably have a tough time. And so I hope that, when people are looking at these opportunities, they really do their diligence. And then they understand the fundamentals of the business, and hopefully they have instead of a 3 months view or a 1 month view on what's going to happen with the stock price, more like a view, okay, can this business, grow, sustain itself, be an independent, solid company over the next 5 years? And I think the ones that have those characteristics, even if they went public via SPAC or with an IPO, they're probably going to be successful.
Well, hopefully some of those characteristics, or all of them, will be embodied in Insider as it continues its trajectory of incredible growth and international spread. So with that, we should probably wrap up our conversation, but it has been a great tour around the world of entrepreneurship, technology, and startups and investments. Thanks so much, Francisco, Hande, for joining us inside the Ice House.
Thank you for having us.
Thank you very much, Josh, for the great questions.
And that is our conversation for this week. Our guests were Francisco Alvarez-Demalde, co-founder and co-managing partner of Riverwood Capital, and Hande Cilingir, co-founder and CEO of Insider. If you like what you heard, please rate us on iTunes so other folks know where to find us. And if you've got a comment or a question you'd like one of our experts to tackle on a future show, email us at icehouse@ice.com or tweet at us at Icehouse Podcast. Our show is produced by Pete Ash with production assistance from Brian Hopkins and Ian Wolfe. I'm Josh King, your host, signing off from the library of the New York Stock Exchange. Thanks for listening. Talk to you next week.
Information contained in this podcast was obtained in part from publicly available sources and not independently verified. Neither ICE nor its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the information, and do not sponsor, approve, or endorse any of the content herein, all of which is presented solely for informational and educational purposes. Nothing herein constitutes an offer to sell, a solicitation of an offer to buy any security, or a recommendation of any security or trading practice. Some portions of the preceding conversation may have been edited for the purpose of length or clarity.